Alex, good to see you again. Thank you for having me back. I had not heard Bob say that before, but it's interesting the point he makes, because you set the scene for the market that we have at the moment. You've got a war that continues with Russia. It's a bit of a proxy war with the West and Ukraine. You have a war in Israel, both on their southern border and northern border. You've certainly got some sort of Iranian proxy involvement. And then you have the Houthis who are launching missiles into the Red Sea and creating some real issues there. You also have robust demand that has occurred last year out of the US and probably outperformed. And you have an OPEC that's done a pretty good job over the last few years. And therefore, why aren't we at $100? Because, you know, if you were playing a trading game and I told you that set of facts, you would sit there and say, oh, the oil markets must be on fire at the moment. Surely they're going up. Yet we're at, what are we, $78 on Brent, $73 on WTI. And I think the answer comes back to good old supply and demand, which the oil market has largely ignored for the last 3 or 4 years as we've gone from kind of crisis to crisis. But supply outperformed last year. You're sitting in the US. I think the US probably grew 1 million barrels a day last year, which was unexpected. If we'd done this interview earlier last year, I would have said to you a number around 600,000-700,000. You've got the old, Guyana, Brazil, these kind of things that people well understand are growing, but some of the ones who are declining also did better. So, yes, you had a reasonable demand year, but supply outstripped, and that's what the market's focused on. And the market is pretty relaxed about the world events. The price tells you that.
Ben, good morning. It's Guy. Is there anything OPEC can do about that? OPEC Plus, it's tried to manage that supply side. Maybe it didn't get the result it was looking for. Do you think it has more success in 2024?
I think they're in a tough spot because I think they did a very good job. They took a lot of criticism over the last few years, but if you look at the price set, they kind of managed it, yes, with their own to their own benefit, but a bit of the stability of the market is down to OPEC and what they did. The problem is now the market is at $78, a price they're probably not in love with. I think they prefer an 8 in front of it, certainly. They've got a couple of million barrels off the market at the moment, and the market knows that. So if you think about the next sort of crisis or problem, there is a solver if we have a problem, because OPEC can come back quite quickly. And that's why I think you've got a bit of a bookend on the market at the moment where it's hard to go much higher, but it's also hard to go much lower. So famous last words, but we enter 2024, and the general feel around the place here is we're probably in for a year that is range-bound on prices, because there are good reasons why it shouldn't break out. But honestly, it's famous last words after the last few years.
Totally, Ben, 100%. But, it's interesting. The range we would have talked about a few months ago was that floor is 80. Saudis definitely want the floor to be 80. Now I'm wondering if the floor is really wind up going to be 60. And at what point... First of all, what range are you talking about? And then at what point are the Saudis going to be like, guys, I'm tired of losing all this money and this revenue. We just got to keep pumping.
Yeah, it's a danger, right, isn't it? It's happened before. We've had price wars in OPEC before. I don't sense that at the moment. I think the Saudis, it is still $78. Let's not kid ourselves. That's still a good price for oil in this market, despite a couple of years of higher inflation. I think the market, frankly speaking, it can trade lower than here without much problem. It's bouncing around at the moment. It's very noisy. It's $2 every day, but it's actually not moving. It's $74 to $79 and has been so for a number of weeks now. I don't think the floor is really 60. I think once you're into the 60s, you are creating problems for this industry. I think you're creating problems for a number of producers, and I think you'll see action at that point. But I think the other side it holds true as well. Once you're into 80, I mean, the world economy is not out of the woods yet, and I don't think there's a very comfortable number as you head through the 80s. So I think the range, and I hate to be the person who says it's sort of $5 each side of where it is now, because I think that's a very soft call. But that is where the market is at the moment. So despite the noise, we are range bound for now.